Guys, good morning. Let's do a quick pre-market rundown. It seems like most of the action overnight had to do with the yen, so I'm kind of disappointed in myself. It was a nice move on the hourly back to the 200. Whether you're looking at the pound versus the yen, um, or the dollar yen. I mean, you guys see the headlines. That's not the point here to go over what the headlines mean and try to guess policy or talk about what central bank is doing from this day to the next. Let's just talk about what is happening, what price is doing. And again, we don't need to know. We don't need to know what's going to happen. We just need to know how to trade what is happening. So I talked about yesterday. We covered down here. We were oversold on the 4 hour. So we came in yesterday, and if you made good sales, it made sense to cover down here at the bottom of the cycle, which we did, and we did the same thing on the dollar yen. And then yesterday afternoon, it also made sense to put a little bit back out, and this move back up into the 200 on the hourly. I mean, that was really a gift. So sometimes, it's just tough to trade 24/7. So if you made sales, it made sense to come back in this morning, back down at the bottom of the hourly and get some back and cover. And currently we're just sitting in this ebb and flow back on the near term. The near term is positive if you want to look at the 5 minute. This uptrend, 5 minute held around pi this morning, around 6 a.m. And then it's been in an uptrend ever since. So maybe we push back to 139. I don't know. We have the Fed today. It's probably just going to be choppy. But that's where the opportunity was last night to fade that Bank of Japan news. 200 hour was a good spot. And then as the hourly came back down, that was a good place to cover. So I think you guys get the gist of that. Now, kind of be patient, but as this actually starts to cross, we'll see where price is. We'll probably want to move back towards 139. We'll see. I'll update on that. Same kind of thing for dollar yen. Just quickly, had nice covers yesterday. I just put some back out this morning. And within the context of this 4 hour downtrend, I mean, I'd sell more around 106.5. Just depends on how it gets there. And then you can see the hourlies. The hourly still has room to come up, but I like this 4 hour cross, so that's why I sold. And then I'm gonna just keep trading it around. Again, this was in the context of a bigger picture downtrend, so I'm playing it from the short side for that reason. S&Ps this morning, this chart's kind of marked up, but if we go to the cash, it's just the same annoying grind. So every bear in the world wants this to crack and roll over. I don't know if you're going to get it. It's a tight range now. I mean, 10 handles. How many handles is this? 10 handles, maybe 15. So I would use 2160 as kind of a near-term pivot. Well, let's call it intermediate-term pivot, right? To really break to new lower lows. We're still in the context of this uptrend. The hourly's flipped to bullish. Come on, to start the year. But if we draw a trend line here, 2155, 2160. That's the bottom of the near-term range. If we can close an hourly or a 4 hour bar below this level, maybe we can get a move back to 2120, back in here to pi. I just don't know if you're going to get it. For the traders in my futures room, Uh, we're playing a core long here. You can see we got long after Brexit. Dow futures have been trading around. I most recently bought here, and I just took that piece off. I think I sold a third. So that's really the right move. You get another dip on the hourly or the 4 hour, you can go back in and buy some more Dow futures. I'm short the Nikkei against that. I covered well yesterday. It's the same trade as the yen, right? So I'll probably put some back out here. Um, 17,000 seems to be the real resistance. We failed at 1690 before. Um, I don't know what else to cover. Apple's in the news with their earnings. Big picture, I think it's probably bid at 103 when I checked this morning, so it's going to gap up into this 200. I don't really like the faded earnings gap up. I mean, I don't know. I'd rather be long down here around 90 or lower. If you bottom well this year, you could take some off with this gap up. Use that as an opportunity to take some profits. To play a short in Apple, it really makes sense more like 110. So Apple's just kind of in a big picture range trade. It's really hasn't done much on a weekly and monthly basis for a while. So I'd be a seller at 110, buyer below 90. Uh, just think there's better instruments to trade overall. So I think, for today, if you're trading S&Ps, let's just go to the 15-minute. Yeah, you can look to make some sales up around 2172. And then again, the best place to be long intraday and intermediate term is 2155 to 2160. So that's kind of the range trade that we're in. I don't know if you want to get, it's pretty easy to get chopped up in the middle here. So I would stay wide at the wings. And I'm not, please don't chase if we get above 2172 and try to get long thinking it's a breakout. I mean, don't do that intraday. If you want to do it longer term because you get a daily close or it's a Friday and we close the week higher, maybe, but just really don't want to chase the all-time highs here after this type of move, this slingshot move. So that's just not how we trade in our model. And then lastly, let's just look at bonds. It's still just kind of bouncing along the bottom. They want to trade higher. I mean, you're making higher lows. We had a little bit of a wedge going on earlier in the week, end of last week, earlier in the week, and then everybody's just waiting on the Fed here. But what I've been saying is if we get above 172 and 3/4, then this can move a little bit higher for an intermediate term basis. So I'd rather be a buyer in bonds. I missed buying this dip. This cycle low on the hourly was a good spot. Was this yesterday? Missed it down here also. I'm already long, so I'm just being patient here on this position. If you want to day trade 30s, this is a pretty good uptrend that's starting. So if you get a pullback maybe before the Fed around 170, 130, it makes sense. Try to buy a few. Maybe you can pull 6 or 7 ticks out before the Fed. So anyway, that's how I play it. But hey guys, listen, as far as I'm gonna try to do a live Q&A just for the general anybody that's in the trading room. I don't know if we're gonna send it out for the general public or not, but before the Fed, as we're kind of waiting, market's probably gonna be slow around noon. We're gonna do live Q&A, and we'll just go over some stuff in the markets, or if you guys have some questions about different things in the model, or you want to talk about the VIX, or you guys have questions about your trading lately, we're gonna hold that session today around noon. So if you're new, visit the site jenkinsrm.com. My Twitter handle's @JasonJenkins, and I'll try to get on here. We'll do a video post the Fed. All right, guys. Good luck.